Okay, fam, welcome back. So today we're going to be going over the Mag 7 earnings, PCE inflation, and dividend declaration. So with that being said, let's get it. All right, so we're going to start now with earnings. The things that I want to look at that I think are probably the most important here, and we've gone over this already. There's tons and tons and tons of earnings this week, probably too many, way too many to go over. There's probably like 1,000 different reports that are coming in. So for this week, we're going to look at Visa and Microsoft, Meta, and Qualcomm, which come out after market close tonight. But obviously, I'm not going to be able to cover that with you guys today, so we'll do that tomorrow. Again, Mag 7, the credit card companies, oil companies, and semiconductors is what we're going to be looking at. Those are all the major metrics that I'm looking for to gauge where the markets are going to be going and where the economy is going to be going. So tomorrow we got Apple, Amazon, MasterCard. Obviously, there's tons and tons of other companies. You'll probably have to go to a different channel to get those covered. So, and then on Friday, the oil stocks, so ExxonMobil and Chevron. So the only one that we can actually cover right now would actually be Visa, which reported yesterday. This minus symbol means that there's no particular time that it was supposed to be reported, as far as I know, or that it's already been reported of both. So let's take a look at it. I'm going to go back to Tesla in a minute because I also want to look at that with y'all as well. Okay, so clearly this thing got bought up, so the markets are obviously very bullish on Visa. There was still a beat here. They are still increasing the revenue over estimates and reported earnings over estimates, so that means that the economy is still strong. Obviously, people are still going into massive debt to buy stuff they can't afford, to impress people they don't like, and yada, yada. You know the old saying, right? I don't think I need to repeat this. So very bullish from the credit perspective. Again, I don't know Visa's exact details, but I think they do something like around, I think it was last time I checked, around $8 trillion in transaction fees or something like that. So it's really an insane amount of money. So it's a very, very strong measure of demand and, consumer sentiment and stuff like that. Okay, so the next thing that I want to talk about is actually the PCE inflation. So let's go over that real quick. So the market sold off this morning and then basically bought back up the dip. I saw the sell-off not quite from the open, but pretty close to the open, and I wasn't really all that surprised, to be honest. I was kind of like, yeah, okay, the markets were selling off because they didn't like that PCE came in much lower than expectations, but, what do you want, right? If it comes in too hot, then the market's going to freak out because they'll think the Fed will have to raise rates. If it comes in too cool, they'll freak out because they're going to think that the Fed has to do emergency cuts. So either way, in this case, either way, good news is bad news. Again, it's all based on market interpretation, but let's see here. So GDP this was good. This was not good. Much way lower than expected. Wow. Okay, so let's see. GDP growth month over month -2. So that is not great, but at the same time, you got to think about it from the inverse perspective. The faster this stuff comes down, the faster the Fed can cut rates. I'm not necessarily suggesting it should come down fast. I'd like to see a slow, gradual decrease, but that's just me. But if we could rip the Band-Aid off and get it over with immediately, that would be better. A more 2020 style recovery, where the Fed just starts printing money and they go pretty quickly into quantitative easing. So I don't care about the price index. Let's take a look at core. Where is it? Core PCE. This is what I want. Core PCE price index. So this is the Fed's preferred measure of inflation. The thing I wanted to point out here is that it came in much lower than expectations. So that was more than a 10% drop from the previous report. It was, not lower than expectations, lower than the previous report. It was at expectations, but again, 2.6%. What the Fed is looking for at this point is for inflation to be at 2% or pretty close to 2% before cutting. So based on this read, it does appear that maybe the June cut is actually really going to happen. So in terms of the markets and what they expect, we got the FOMC in 6 days, still expecting no rate cut, as you guys can see here. But then in June, pretty much more or less a guarantee of a rate cut, which is great. July, another rate cut. And let's see, September. Wow, surprisingly, September, another rate cut. So we got 3 rate cuts on the table. No rate cut in October, or maybe possibly a rate cut. It seems like the markets are a little unsure about that. This thing is always changing, by the way, and then a 4th rate cut in December. So yeah, I would say that's pretty probable. If we start getting the rate cuts in June, I mean, the markets could very easily rally into the end of the year. Again, that kind of wouldn't shock me. We had kind of a piss poor first half of 2025 according to market performance. If you're a bull, that is. If you're a bear, you love this stuff. But then the second half could be really, really bullish, much more so than probably most people would expect. Okay, so let's cover the markets real quick. So the NASDAQ went down, then it went up. That's not really what I care about. Just wanted to point that out. So 4-hourly, nice little dip, but then we are recovering, retesting a structure level here. So you can see that structure level, right? Candle tops, candle bottoms. It does appear bullish, like it wants to bounce. And we are finally above the EMAs on the daily. Last time this happened, though, or I should say the last 2 times this happened, we did not last. So we went up and then we dropped, and then we went above it and then we dropped. So this is something to potentially look at and be a little concerned about, because we did get above it the last 2 times, but then it sold off like a banshee to the downside. And again, do I think this is going to happen a 3rd time? No. There's multiple reasons for that. We talked about the macro indicators yesterday. Those are the main reasons why, especially the oversold RSI signal, the 200-week moving average, and the super zwag bread thrust. Plus, this is kind of a basing formation right here, potentially setting up maybe a macro inverse head and shoulders pattern for a breakout. Okay, so let's talk about Tesla real quick. So Tesla is potentially bottoming out here. You see all this sideways, right? We saw something very similar back here, and eventually it did have a very large move from right around that same exact level at 215 all the way up to nearly $500 a share. And this came, of course, after a huge pullback, and then it ripped, right? And then it pulled back and it kind of consolidated right around the same level, and then boom, took off to the upside. The golden cross popped up at a different time in the price action than it has currently, but you guys can see we're getting pretty close to a golden cross here on the weekly. On the MACD, we already had one on the RSI. And if this is accumulation, which it looks like it is, because we kind of went sideways, up, down, up, down, up, down, and then had this fat green engulfing candle, which basically covered all of these ones, and then now we're trying to push against the EMAs, then we should see some upside. The only concern I have here is this major block of resistance and the fact that we're kind of struggling at the EMAs. That's the only concern I have at this point. But if we get above that, I mean, it's pretty much game over. This thing's probably going very quickly up to $420 a share. Okay, so Soxel is down a little bit as well. And I mean, the VIX is still above 20. That's obviously not great, but I'm not really too concerned about that right now. I do think it will come back down. So let's cover the dividend declarations. We'll start with SPYT. We'll do a triple QT as well, because some of you guys might have that. So recent declaration right here, which is today, and then looks like the payment date is going to be on the 2nd. So we have this Friday. So 28 cents. Does that shock me? Not really. I mean, the markets have had huge pullbacks. So when they go back up, I suspect the dividend will also increase as well. Okay, so triple QT, 27 cents. Obviously, the dividend has gone down over time, right? But during that, during kind of this period, like November all the way to February, we kind of went sideways, and then we obviously sold off, right? So like I told you all before, if a lot of these funds, if the markets are going sideways and there's a dividend being paid out, that means that eats into the NAV, right? If it's going down and a dividend gets paid out, the dividend has to go down, which it will probably still eat into the NAV, but not as badly. So the best case scenario for these funds is for the markets to go up. And that's pretty much that. So QDTE, next one here, 22 cents. So not quite as large as last week, but I mean, then again, the markets have kind of bottomed out and they've just been consolidating. So the thing you have to understand about options is it doesn't really matter if the markets are going up or down. It only matters if there's volatility. If it's going sideways, there's not going to be as much volatility. So most people that are in options, they want the markets to move up or down. If you know how to do puts, then you don't care if it moves down, or calls, you don't care if it moves up, right? As long as it does something. So 25.5 cents here on XDTE. That's the one that we have. And then RDTE. So this one also 25.5 cents. RDTE is probably going to be the most volatile one because, again, that's small caps. Okay, so the yield max ETF, so we got CHPY 62 cents, GPTY 29 cents, LFGY 47 cents, QDTY 33.5 cents, RDTY 47 cents, SDTY 31 cents, ULTY 9 cents, YMAG 10 cents, YMAX 17.5 cents, ABNY 60 cents, AMDY 33.5 cents, Coney 65 cents, CVNY 268, Fiat 56 cents, MSFO 52 cents or 52.5 cents, NFLY 92 cents, and then 55 cents for PYPY. Okay, so now that we've covered that, let's talk about the portfolio real quick. So again, we do still have record cash, nice little dippy dip here in the markets today. I'm still expecting probably a pretty, I think likely the market's probably going to rally into the end of the week because of the Mag 7 earnings. So yeah, I'm expecting a pretty large bouncy going into Friday, even into the close. So actually finally up about 8.6% on the week and a little bit more than break even on the month. So not bad. Just would really like to see these markets break out to new all-time highs, or back above previous structure, I should say. Okay, so we bought some more TSLL this morning. Again, told you guys that we were going to try to be strategic on these dips, waiting for them to pull back. So it was at $11 or so yesterday and then dropped down to $9.42. So we have 1,560 shares at $11.78. And I mean, we didn't catch the exact bottom, but it's really difficult to time exact bottoms and tops. It's nearly impossible, even for people that are worth billions of dollars. It's very difficult to do. Okay, so 20.55 shares there purchased. And then the next position that we bought, obviously, I'm sure you guys have probably guessed, is JEPQ. And again, we did buy on this dip. Didn't time it perfectly exactly, but got some of it. And then obviously it recovered pretty nicely. So that's always good. So 19.46 shares here at just under 51. And we managed to scoop up almost 4 shares at 50.90 per share. So again, it wasn't really the exact bottom. It was probably about halfway down. Yeah, roughly about halfway down. And then it dipped more and we didn't get all of that, and that's fine. But then it rallied back up. So it really doesn't matter at this point. So yeah, in terms of the dividend positions, so we have the first, again, we want to get to 30, 50, 70, and $100 a month on each of these. And then once we get all 12 to where we want, we'll maybe think about getting more positions. But it's GPIC, GPIX, JEPQ, QQI, IWMI, SCHD, ACP, PDI, BSTZ, XDTE, AIPI, and SPYT. And then we have TSLL and SOXL for options for now. So the ones that we have at $30 a month is GPIC, QQI, IWMI, ACP, PDI, XDTE, AIPI, and SPYT. Again, dividend investors are loving this market right now because the markets are still down massively. They get to buy at a deep discount, get more income for less money because, again, the dividend and the price of a dividend-paying ETF and or stock have an inverse correlation. So when the price is cheaper, the yield of the dividend goes up. So you get more money. You get to buy more shares for less money, which equals more income. But when the price goes up, then the dividend drops. So you have to pay more money to get more income because the shares are expensive. So you basically get less income for more money. So yeah, we're not gonna pass this opportunity up because, again, these huge 15, 20, 30% drops, they don't happen very often. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.